Hey guys, Anthony here, owner of Riverbank Finance, an independent mortgage broker here in Grand Rapids. I wanted to do a quick recording for our clients and realtors, referral partners, and kind of take on a couple of the myths that we're hearing out there these days and clear up some confusion on what's happening with mortgage rates and the economy as we fight with this coronavirus outbreak that's spreading as a pandemic across the world. So everyone knows, if they've been watching the news or reading headlines in the newspaper or on websites, what's happening is there's extreme volatility, and we are dealing with a major threat with the coronavirus. The economic slowdown and the impacts from shutting down major public events is going to have long-term effects on what happens with the profitability of companies here in the United States and globally. And because of that, stocks are adjusting, and people are running from stocks, investing in bonds, and it's causing a world of chaos in the financial markets. Now, one result of that is a lot of people might have recently seen is mortgage rates did drop to historic lows. So I want to talk on that and kind of educate everyone on what's going on with that, and kind of bring everyone up to speed on where we're at today. So the fact is, mortgage rates did hit historic lows the first part of March here in 2020. Now, since then, a lot has happened. And if you're listening to the news and just looking at posts from people that don't really follow the data, you might be looking at bad advice and bad information. So again, that's my purpose of making this video. So with that, let's go ahead and take a look at the data, and I'll try to help explain it in a way that might make sense and connect the dots for you. So I'm going to bring up some charts here on some software that we subscribe to, so bear with me real quick. All right, so these charts are tracking the mortgage-backed securities. So mortgage pricing is based on what investors are willing to pay for a pool of mortgage-backed securities. So essentially, as we look at this chart, the higher, the better. That means that investors are willing to pay more for mortgage rates at a certain level. So as we look at the chart, higher is better, lower is worse for rates. So I have here a 1-month chart. Actually, and you can see the general amount. It starts lower down here. It peaks up. This is where we had the best mortgage rates in history, as everyone heard. And then you see sharply after this a steep decline. So let's jump into another chart. This is called a Candlestick Chart. So it kind of tracks what's been happening as far as incremental daily updates on where the rates are at. And again, with this, higher the better. It means that investors are willing to pay more for mortgage-backed securities, which results in lower mortgage rates. So this goes back to the beginning of 2020 here. You can see it's pretty much flat up until the beginning of March, where we saw mortgage rates starting to get better. About this time is where we saw some of the lowest mortgage rates in history. And now, as you can see, as we proceed into March and as time goes on, what investors are willing to pay for these mortgage-backed securities has dropped. And if you kind of take a look and just look at, draw a line across it, we're basically flat on where rates were to start the year. Now, it doesn't mean that people can't save on their mortgages still. It just means that the news and everything you're hearing about rates being the lowest ever, well, that is old news at this point. So it's important to know the difference and to know why. So looking at the data and the facts on it is what we want to do as independent mortgage brokers and educators for our clients, to explain the why behind it and not just say, sorry, our rates are higher. I'm going to pull up one more chart here and help to answer the next question. So a lot of our clients are calling right now and following up with us and saying, hey, does it make sense for me to refinance my house? Should I jump on this bandwagon and try to drop my rate down? Like everyone's saying on the news, rates are historic lows, right? So this is another chart. It's stretched out back to 2015-ish. You can kind of see where rates are at. So 2016 had some of the lowest rates in history, and you might, if you've been around a while and followed the news, you might have heard that back then, which was true. And you can see rates did hit that point again here, here in March in 2020. But as you take a look, the rates are dropping back down. The pricing on mortgage-backed securities is dropping back down and kind of leveling off. So if you take a look over the last 6 months or so, 6 to 8 months, there's really not much benefit at this point to jumping in and trying to refinance. Now, with that said, rates are still great. They're still near some of the lowest ever. It's not out of the question to look at rates in the threes and take a look to see what you can do. So we always recommend having a conversation with your mortgage broker. Take a look, see what you can do, compare the numbers, do a cost-benefit analysis, and a break-even analysis to see how long it would take you to recover any cost to refinance, and make the decision. So our job is to educate you and give you the information, and you can decide what's best for your families. So who might benefit from these historically low rates are people that might have gotten a loan anywhere in the dips here. So after 2016, we experienced a sharp spike right after the elections in mortgage rates. And again, down is bad for rates. That means rates went up. So basically 2016 and then most of 2018, rates were significantly higher than what you'll find today. So if you got a mortgage in 2018, chances are you could probably save on your mortgage. If you got a mortgage somewhere in the last 6 months, you're probably not saving much. But again, who knows what's going to happen is the volatility continues in the market and uncertainties plague the United States and the financial markets. So again, talk to your mortgage broker. Let's review it and let's keep a close eye to see if we can lock in savings for you. Any questions, feel free to reach out to us. We're always here to help and make sure you're up to date on what the data says.